Lisa J. Stocks here. Today, we're going to be talking about straightforward, effective ways of investing. I'm going to go over some choices that will give you exposure to the total stock market. If you ever felt overwhelmed that the stock market was too complex, then this video is for you. You can gain exposure to the total stock market by investing into funds such as VTI, FSKAS, and VTSAX. So let's get into this video and let's make investing simple and accessible to us all. You might be wondering, why are we going to review these particular funds? They are a clear path to diversification. Individually hold 3,700 to 3,900 different stocks, spanning small, mid, large cap, as well as encompassing many different sectors. Diversification of your portfolio is key to reducing risk and not having all of your money in one place. This is a way to get on track to building a strong, diversified portfolio that's well balanced and gives you exposure to a huge selection of stocks within the market. First, let's talk about expense ratios. They are the fees that you have to pay for being a part of a managed fund like the ones that I've mentioned. They all boast inexpensive expense ratios, but we'll get more into that. Expense ratio, as well as performance, are both very important to me. I want you to be mindful of this because why pay all of this money that is unnecessary to have our money working for us? Whether we're talking about $5,000 or $500,000, I don't want to be losing 0.5% or 1% to fees. So I just want to put some numbers to it so you can understand what I mean by ratios that I find to be too high. That's too much of my money to be lost to fees. So here's the plan. Your investing can be a set it and forget it type of thing. With this type of investing, you don't need to be glued to the charts, watching the news, watching the markets constantly. By investing into funds regularly, dollar cost averaging, for example, I'm going to show you my results from investing $10 daily into VTI. You'll just be focused on building up your share size over time. This strategy helps to smooth out the volatility. And what I mean by that is investing is not like the top image here. You don't just go in a straight line up to a 10% return. The reality is what you're seeing at the bottom of the screen. The market goes up and down, but by making sound investment choices, you can see the historical rate of return and make a plan to build a strong foundation for your portfolio. All right, so let's take a look at my results of my investing into VTI. I've been investing for the last 16 months, 5 days a week. And this is the outcome. Steady, reliable growth in my portfolio. Investing whether the market was up or down. Following the mindset that time in the market is more important than timing the market. And allowing myself to be benefited by compound interest by staying consistent to my investing. This will allow you to see your wealth snowball over time. Over the last 16 months, I've gotten to 16.6 shares, and my percentage of gain is 13.4%. So now let's take a close look at the different funds. Let's start with VTI. VTI is the Vanguard Total Stock Market ETF. It currently holds 3,760 different stocks. The top 10 holdings are listed here: Microsoft, Apple, Amazon, Nvidia, and Google are the top 5. All 3 of the funds that we're going to be discussing are called total stock market funds, but they each track different indexes. For example, VTI tracks MSCI, the US Broad Market Index, and is focused on large, mid, and small cap stocks, diversified across growth and value. All of them are going to give you exposure to different sectors. Now let's move on to FSKAX. This is the Fidelity Total Market Index Fund, and this tracks the Dow Jones Index. It has the same top 5 holdings, a little bit of variation when we go to compare the top 10. For example, VTI has Eli Lilly as the 10th position, while FSKAX has JP Morgan Chase. Now taking a look at VTSAX, which is the Vanguard Total Stock Market Index Fund. It tracks the Dow Jones as well as CRSP, the U.S. Total Stock Market Index. So that's what's causing the slight variation of the stocks that are held in each of these funds. So VTI is an ETF, an exchange traded fund, while FSKAS and VTSAX are index funds. ETFs trade like stocks throughout the day, offering flexibility, while index funds are bought and sold at the end of the day at the net asset value. As we just touched on, they all track different indexes, have varying expense ratios, and a mix of stock types. And we're going to continue to dig into these differences because this is what will help you to make an informed choice on your investments. So VTI has an expense ratio of 0.03, while FSKAX has an expense ratio of 0.015, and VTSAX has an expense ratio of 0.04. Out of the three funds, this one also has several fees and minimums associated with investing into this particular index fund. So because of this, out of these three fund choices, I would go with VTI or FSKAX, especially if I was ready to get started and didn't want to be limited by having to get to a minimum investment amount of $2,500, for example. In addition to the higher expense ratio and the fees associated, if you look at the rate of return of this fund, you'll see this comparable to FSKAX. And taking a look at the performance of VTI on the year, it's up 19.31%. And on the 5-year, it's up 71.67%. This is a strategy to consider, investing into ETFs or index funds. To get started, perhaps as your total portfolio or a high percentage of your portfolio. While these funds provide a steady, diversified approach to investing, the rate of return might be lower than riskier investments, but the trade-off there is more stability and a reliable investment journey. And that's why I have a high percentage of my portfolios and my daughter's portfolios in funds like this, total stock market or S&P 500. So this is a breakdown that I got from Kenan Grace that I use as a guideline in creating portfolios and the percentage that I want to have invested. For my daughter, I just did an 80% funds, 20% individual stock breakdown, and I add money monthly to it and just allocate it out in the same percentages. For myself, I follow a breakdown like this, where I'm having a strong foundation of an ETF, for example, VTI, as we've been talking about today. Then I have individual stocks that include my Apple, Google, Tesla, and other blue chip stocks that I wanted to have more of a direct exposure to. And then from there, I keep some cash on hand for future investments, options, or trading. And with the rates being about 5% on your uninvested cash, they're definitely giving me the incentive to keep cash on hand and ready for my investing. With these type of funds, you do receive a quarterly dividend. And for right now, I am reinvesting my dividend to continue to build up my positions into these ETFs or index funds. I wanted to share this because I don't want investing to be overwhelming. There are some factors and differences that you need to take a look at, like I tried to highlight in this video, but you can work your way through those easily and choose a fund that gives you broad exposure diversification, and stability. I want us all to be on the road to financial success together. And a big part of that is getting started and being consistent with your investments. So whether you're an experienced investor or just getting started, think about incorporating ETFs or index funds into your portfolio. So guys, remember, I am not a financial advisor. I'm just here sharing my journey with you. Please leave me a comment. Let me know if there's any other funds that you'd like me to take a look at or do a deeper dive into dividend yield or other aspects. I do work full time. I have a 401k. I have an IRA. I have a UTMA account for my daughter at Fidelity. In addition to that, I do invest into taxable accounts. For example, at MooMoo and Webull. I do this because I want to have funds that are accessible to me when I want them, not necessarily everything tied to retirement. If you're ready to open a new account, please use my link. We'll both get free stock and you'll be supporting the channel. Don't forget to like, subscribe, and hit the notification bell. Hope you enjoyed this video. Okay, bye.